All right. Hello and welcome to the Super Team podcast. Today we have a team that we have been excited for over a year now, and we
Over a
finally
year
get to
now.
have them.
It's been a while.
It's been a
Yeah.
year, guys.
We've been waiting for you all to ship, and we're so excited that this is finally live, and we can't wait to talk to you about the product.
It's funny how time flies.
Yes.
Yeah. And it's not cheap. Time is money.
Welcome, guys. Welcome to the Timeswap team. Could all of you introduce yourselves? Tell us a little bit about what you guys do at Timeswap.
My name's Rickson. I'm called Time Lord. Really corny name. Yeah. So I'm the smart contract developer of Timeswap. I was the one who ideated the idea of the protocol. And my background is usually mathematics applied in finance, usually. So yeah.
So, hi, I'm Harshita. I'm one of the co-founder with Timeswap Labs. And so basically, anything which is non-technical is shared between me and Amit, let it be finance, operations, HR, investor management, etc.
My name is Amit. I'm one of the co-founders of Timeswap. Uh, Prior to Timeswap, I was in fintech, and before that in banking. So I've come the full circle now, from banking to fintech to now DeFi. So the full stack experience of finance, and like Harshita mentioned, I take care of basically everything non-tech and product. So investment, treasury, team building, content, marketing, community, Discord, okay, Twitter, all of that.
Nice to meet you guys. I wanted to first ask ask a non-technical question. What is Timeswap? How does it work? Can you explain it? And I'm asking this because I am probably lowest IQ person on this panel. So if I understand it, I assume the audience will understand it. Can someone explain to me what is Timeswap? Like I am a 12-year-old.
Just think of TimeSwap as a way in Uniswap, right? You can swap tokens in the present
Correct.
time, right? That's what's
Correct.
happening. In TimeSwap, you're essentially swapping tokens through time. So you can swap your tokens from the present to the future or from the future to the present. That's why TimeSwap is a lending and borrowing. Because when you lend, you're essentially moving your tokens to the future. And when you borrow, vice versa, from the future to the present.
So lending borrowing protocol.
And that's also the inspiration of the name, TimeSwap.
Okay, got it. Cool. I understood it.
In fact, Tanmay and I were discussing this earlier, before the call. Uniswap is like a barter system, right? Where you can exchange anything that you own for anything that you want to own. You can exchange, your mug for a T-shirt, and there's a curve that determines at what price that happens. Whereas TimeSwap, is it fair to say it's like barter for borrow lending? So you can go deposit your T-shirt with a pawnbroker who typically only accepts gold, but let's assume at some point some pawnbroker accepts your T-shirt, and you can borrow a mug against that. Is that reasonable? At an
Yeah,
interest rate
exactly.
determined by the market.
Yes, exactly. You could think that's happening all in the present, right? But if you take into account what's happening in the future, it's like you're moving those uh, assets
Yeah.
through time. At least that's a way to
Yeah.
think about it.
Rickson, how did you stumble upon this idea? Why you thought this idea? What was currently broken? And how come this thought came to you?
Oh, that's a very long story.
Well, we have an hour. Go for it.
So I learned about Bitcoin and Ethereum roughly right now it's 2022, 5 years ago. So that's roughly where it boomed a bit,
Got it.
right? And I learned about the importance of decentralization. After a few months after that, I've learned about Uniswap. That's the first time. Actually, other than Bitcoin and Ethereum, Uniswap is the first ever DeFi app I've ever played around. I think the first transaction I made is I swapped ETH with DAI, and the UI was like, whoa! It's like you don't have to sign anything. There's no stupid KYC. You don't have to waste 5 hours. You just have to connect your wallet, and it just works. That's the experience I love, and I think a lot of people would love that experience. From there, I want to see, okay, what are other financial products, or services that is somewhat similar to Uniswap that has the same characteristics and the feel. but for other cases, right? So at that time, I learned about Aave and Compound. I think those are the most prominent lending borrowing at that time. Right now, obviously, there's a lot of other forks, and when I look at their code, when I look at how it's structured, right, and I compare to how, let's say, Uniswap is structured, I see that there's a lot of discrepancy. For sure, they don't having compound the lending borrowing protocol back then don't have the same characteristics that Uniswap has, that I really like. Now, you might be wondering, what are those characteristics that I'm talking about? Okay, so there's three. I usually say this to people I meet. So the first the first characteristics that's really important for me, at least in my opinion, is permissionlessness, right? The fact that anyone could just create a market to trade any tokens. The second is a bit more technical, which is, if you look at how it works, it's generalized. It means it just works for any pair of ERC20, right? So anyone could just trade because of this generalized. For sure, its algorithm doesn't have a special parameter that only works for a particular number of tokens. It just works for all tokens.
Sorry, can you maybe compare that to the other borrow lending protocols? Because presumably, when you're saying it doesn't have the features you're describing, it's in comparison to, say, Aave or Compound. Is that right? And can you maybe
Yes.
articulate that difference?
All right. So permissionlessness. What do I mean by that? If you look at Aave Compound, if you want to create a market, you have to ask permission from their token holders. No, you can't just create a market. Sometimes they'll say yes, sometimes they'll say no. You don't have the power there. It's quite scary.
And why would they say no?
Uh, Maybe because the tokens doesn't fit what the parameters that they've designed.
Another important aspect of that is in Aave, all the assets are pooled into one liquidity pool together. So it's essentially, if you add a weak asset into all of these pools, essentially all the other assets are taking on the risk of this low quality asset. So that is the primary reason why Aave has to, be careful of what asset they add into the pool. So it's pool liquidity where a shitcoin can actually impact a high quality asset, and so that's primarily the reason why they have to be careful of, let's say, adding which asset into this pool.
And also, like, you will see a lot of long tail tokens to per se. Like, if you go to Aave and Compound, you will see like 30, 40 odd assets that you can lend and borrow. But the problem behind this is the way the algorithm is designed, that the collateral factor is actually centrally decided. Let's say if I have to borrow ETH, so maybe the collateral factor could be 130%, 140%. So ETH is still a high end asset where like volatility is not that big. But consider a token like Doge ship. If you want to lend and borrow, the volatility could be very massive. So how do I decide a safe collateral factor? And if you look at Aave and Compound, the collateral factor is fixed throughout the life of that lending and borrowing happening. Of course, that changes through governance, but of course that's another additional governance overhead that happens. But there's a essentially design issue where they're actually dependent on oracles, which will, I think, Rickson can speak about it better. But the problem is, like, the design, how they are designed. I mean, it's very risky for them to choose any asset that is very volatile, because it can be basically manipulated easily through oracles, and people can lose their funds.
Yeah, that's the third characteristics that in my opinion, is very important. In Uniswap, it's Oracle-less. Oracle is a source of information where they provide you some information. So in Uniswap, they're not using any oracles whatsoever.
So an oracle is, say, something like Chainlink, yeah?
Something like Chainlink, Uniswap is also an oracle to others. It's not using an oracle, but it's an oracle to others as well.
Okay, an oracle is effectively bringing you data from some source on chain or off chain into your protocol.
Yes, correct. Pretty nearly all lending borrowing protocol right now uses an oracle one way or another. They uses that oracle to determine, okay, how much collateral is it required to lock whenever you borrow. The problem I have with oracles, though, is it's not a game theoretically sound design. Now, what do I mean by that? Because whenever there's a large enough honeypot, and if the oracle is weak enough, then it creates a strong incentives for attackers to manipulate the price of the oracle. one way or another. So what they'll do is they'll try to find a way to change the price of the oracle. Maybe they might take on some loss from manipulating the oracle, but because they manipulate the price of the oracle, they're able to make a transaction in the lending borrowing space such that it's very profitable for them in total. This already happened multiple times in this past 2 years already. Billions of dollars lost due oracle manipulation hacks.
Yeah, I think just 2 hours before this call, like there was a major Oracle manipulation hack which happened like just a couple of hours ago with a DeFi protocol called Inverse Finance. They lost about $15 million. So a guy came in with like $3 million. He manipulated the price of the Oracle, and using that inflated price, he deposited his asset into the protocol, and he borrowed like 15 million by depositing actually like $3 million. So he basically ran away with some 10 12 million dollars. So this is like a fundamental design issue. Like you typically see people calling things as hack. Like when you say hack, typically it is because okay, you designed it in some way, right? But the code that you wrote had some bugs, which basically led to some exploit. But here basically there is no such error. Like it is designed in a way and it's working in that way, but inherently that design itself is flawed. It's not like a execution issue. It's not an issue with the code. It's actually an issue with the design where you're actually relying on an oracle to, as a source of truth. And if somebody is able to manipulate that source of truth, all of your capital is at risk. So it's like the way we look at it is like it's a fundamental design flaw with money markets currently in DeFi, that you are relying on an external source of truth for your source of, for the security of your capital. So
Yeah. So it's from there that okay, I want to create a lending borrowing market that has the same characteristics as Uniswap, but for lending and borrowing. So right now, Timeswap is lending borrowing, wherein literally anyone could just create a market to lend and borrow any ERC20 token and using any other ERC20 token as collateral. I think the missing part is just the third part, right? Which is Timeswap is oracleless. We're not reading from any oracles. We're not reading from Chainlink. We're not reading from Uniswap. We're not reading from anywhere else. The price, which is the interest rate and the collateral requirement, is handled through a free market. So whenever people lend, the interest rate and the collateral requirement goes down. And whenever people borrow, both of those information goes up. So the price goes up and down based on how many lenders and borrowers are interested in lending and borrowing through the pool. And because it's not reading from any oracles, by definition, we can never get oracle manipulated hack. It's like you'll never get a brain tumor if you don't have a
Brain.
head. If you don't have a brain, yeah.
Why did you look at Tanmay when you said this?
I
That's
don't know.
really
I don't
rude.
know.
I mean, that's
It felt
just...
a little rude, but okay.
Okay, so you guys have a pretty entertaining social media presence. Who is Timeswap Intern, and where did you find them? And tell us more about where that came about.
yeah, I think the fundamental, like if you look at how crypto works, right? In crypto, none of the traditional Web2 marketing works. Like you can't pay for ads and expect to get users. You can't do any of the traditional marketing to attract users. So how do you attract users? I think in Web3 is so crypto, as in crypto is so internet native that it's essentially memes that drive user attention. So you're essentially trying to, farm the user's attention, and always memes seems to be the best way to like get the attention of the market. So like I think it was around DeFi summer around that time, like a lot of projects started to have these interns. Like they would create this secondary alt account, which is like project name intern, and they would just shit post all day. Like they won't do anything else. It's just shit posting from morning till night. And surprisingly, many projects actually were getting significant traction out of this. Like people were actually following this for like, okay, you're learning stuff, but it's also entertaining. So somebody who we hired through Super Team itself, like you guys helped us hire him, so he is actually managing the Timeswap intern account. And it's basically right now like 2 3 different people manage that. Like they all spend all day sourcing memes from our community, and basically in any form of way there we can push the messaging of Timeswap in a more fun and entertaining manner. That is the whole goal. I think it's worked out really well for us. Like so many people have DM the intern because seeing his shit post, people will DM the intern saying, okay, like I want to learn more about this project. Like, what is this thing that you keep posting every day where he says like a good project and there is a meme that our community has adopted. So yeah, it's I think the intern account is a great way to farm attention and engagement, and I like it's like a entertaining form of learning about the protocol, and it's like worked really nice for us.
Any big upside from that account? Something specific you can think of? Maybe somebody reached out as a result of it. Maybe something happened that you didn't expect.
I mean, we've had so many VC inbounds through that account. Like, you won't believe the amount of VCs who actually DM the intern and asking, "Hey, I want to learn about your project." So,
I want to be in that VC that meeting where an analyst at a fund was like, "So today I saw this Wazi. Okay, this Wazi was saying this thing on Twitter." Erickson, this sounds pretty significant that you are an Oracle-less platform. Probably makes sense why it's taken a year for you guys to ship. What was the hardest part about building TimeSwap? What was the hardest part?
If you think about it, pretty much all other lending borrowing protocols right now are most of them are just a fork or a copy of Aave Compound. You can imagine how easy it is to do that, right? You could copy the code, you make some changes, add more features into it. Could imagine doing that will just take 3 to 6 months at most, right? In our case, because our design is fundamentally so different from how Aave Compound work, because like I told you, those three characteristics is very important, right? So we have to build it from scratch. So we can't just fork from them because it won't work. Because our protocol works without any oracles whatsoever, right? And it's permissionless. For sure, the algorithm should just work for any pair of tokens, which is really hard to do at that time. Really hard to figure it out. The closest code that we could at least take inspiration from is from Uniswap. But again, Uniswap is for for buying and selling tokens, right? In my case, since I started this 2 years ago, at that time I was just myself. At that time I was just ideating. I went through so many notebooks of ideas where okay, I think of a new idea, write it down, see if it'll work. Would the gas cost be good enough? Things like that. I went through so many notebooks with it. And when I met with Harshita and Amit, that was roughly a year and a
One
half,
and a half years. Yeah.
1.5 year. We start building it, and then in the middle we test it out, see if it works, and then say, "Oh fuck, it doesn't work the way we want it," or "Oh fuck, there's more inefficiency or not efficient stuff." It's like months of hard work, and then when we test it out, it doesn't work as well as we want it to be. So you could imagine that we've went through a lot of iterations of okay, there's no clear solution yet, but we have to try to figure out. Like we're going to the unknown. This is why we went through a lot of iterations. Honestly, if we could just fork Aave Compound and add some feature to it, we'll finish this last year easily.
yeah, I think just to add, like Rickson mentioned, like the single largest challenge is like there is no reference point. Like we are like going from 0 to 1 on like creating a fully decentralized money market. There is no reference point. The thing is that a money market means there is actual capital at risk, and there is no reference point. So how do you test this thing to ensure that okay, this is the correct one? So like even like as early as 2021, we had a prototype ready, like that even went through an audit, and the audit also got cleared. But we felt there was some inefficiencies for like the liquidity provider, which we were not happy with. So we basically changed that. We went through multiple rounds of audits again, and essentially, uh, typically, if you see projects, they will go through testnet for like 2 3 weeks, and after 2 3 weeks, they'll just launch on mainnet. Like in our case, we couldn't afford to do that because we had to like actually test every possible iteration of this thing. So we were actually testing from like October 2021 till like March. So like it was like a 6 month window where we ran multiple incentivized test nets where users were incentivized to like play like the product is actually on mainnet, and if they operated well, they could actually earn money also. So we went through like multiple variations even after the test net, and finally I think we've reached a place where we feel confident now this thing is actually ready to be ready to accept capital and function like we expected.
Yeah, I think we got this, let's say, question from one of so many investors, right? That why do you think that nobody thought of bringing this XYZ equals to K equation? Like at the surface level, it looks very simple, right? Like on Uniswap, you have XY equals to K, you create a third variable and start the market discovery of interest rates and collateral factor. But it wasn't easy. If you look at the white paper, it's like pretty very much detailed, and there are a lot of formulas and equations that goes behind this equation, right? That how do you decide the minting of the tokens to all the user profiles, which is lenders, borrowers, and LPs. And while you're minting it, how do you ensure that it's stable for all the three set of user profiles? So we wanted to be very sure that it is not biased towards any of those users, and it works. It's like economically stable. So
Yeah.
it was like, I think I remember when we joined Rixon 1.5 years back, we started with like first simulations on Excel, then we built a lot of other simulations, tried to automate it, build another simulations, got some interesting discoveries from there, found some edge cases, then we used to go back again. So idea was always, as Amit mentioned, that we wanted to be very safe and wanted to ensure if we are creating the 0 to 1 protocol when we are live, then users are basically not losing their funds, which was very much important to us. So we have done lots of audits through like the top audit firms like Trail of Bits, Code for Arena. So have been ample of audits which we did, but I think it was worth it in the end.
Like Rickson, when you imagined who is the end user that this solution is absolutely perfect for, who all are you thinking of when you say, okay, this person would 100% prefer TimeSwap over everything else?
I think one huge trend that happened in Ethereum back then was the ICO boom, right? Because people can now suddenly create capital. Now 99% of it is shit, true, but 1% is gold. One idea I always have is a very strong and very powerful use case of TimeSwap, which is IDFO, essentially initial debt financing offering, or maybe we can short it to IDF or whatever. The idea here is that because TimeSwap is lending and borrowing, now if you have a new project, you need some funds, right? Some of you could create the tokens representing you, or maybe you could have your own native token or whatever that is. Now, some of it you're gonna sell, right? Because you need the initial funds to start your project up, right? That's called equity financing, right? But now, because of TimeSwap, you can now create a pool wherein you could use your native token as collateral to borrow whatever assets you need. If you need some USD or some ETH, you can now use your native token as collateral and borrow those amounts from your community. And as long as the community believes in your vision, they're willing to lend their hard-earned assets to you for some extra yield of interest. So now suddenly, before TimeSwap, most nearly all DeFi projects only has half of the tool belt of any traditional corporation, right? Traditional corporation generally has two ways of getting extra capital. One way is through equity by selling stocks. The other way is by borrowing by selling bonds, right? Equity financing, debt financing. Those are the two main, and every corporation has a strategy of having both. So now suddenly, all the DeFi projects can now have both tool belts of doing equity financing and debt financing, and that's very very powerful.
Yeah, and I think there's a ton of these native treasury tokens, right? That a lot of these projects have. They might not want to sell it because that sell
Yeah,
pressure might crash the price of the token.
exactly.
Yeah, the liquidity might be thin. So, if they can deposit that and borrow USD against that, and the people who are lending that USD actually believe in the DAO or the project that is doing this, that's a win-win for everybody.
Yeah, I think also like the fundamental beauty of the Timeswap product is that it's generalized for everyone. So it's not like Uniswap, right? Uniswap is generalized for like all the way from Bitcoin, ETH, all the way down to the shittiest of shittiest tokens, right? It works for everyone. And it's the same thing for Timeswap also. Like it's not like Timeswap is only ideal for new projects or like long tail assets. Even the top tier assets like ETH, Bitcoin also, essentially what it allows is like it allows market to decide the collateral factor and interest rate for a particular asset rather than via governance. So I think the best example of that is like right now, like we are live on Polygon, right? So our we have a pool for USDC Matic, where Matic is the collateral. On Aave, I think it's roughly you have to lock collateral of about 140% of your USDC, and you're paying about 3 to 5% interest rate. That is basically based on the Aves curve or interest rate model and the collateral that is decided by their governance. Whereas in our case, since our pools are completely market driven, what's happened here is the market has essentially said that we don't think it requires that much collateral. So currently, you could actually borrow from Timeswap. Like I think we had posted a tweet yesterday where you could borrow up to like 10,000 USDC by depositing Matic with as little as 120% collateral and like interest rate of like 0.5%. That's basically because the market is currently bullish and they believe the value of Matic is going up in the next few days. So the market is accordingly positioning and showing you the interest rate and collateral factor based on the market volatility. So it's like it reacts to the market. It's not like fixed by a certain governance. It basically changes based on how the market volatility of a asset changes. So it's like pure market driven interest rate and collateral discovery model that allows. So basically that can be applied to any asset, all the way from Bitcoin, ETH, all the way down to the any other token also. So it's like a generalized money market for any asset pair.
When you go 0 to 1 on a new idea, there's a lot of like common naysaying that happens, right? Because it's significantly different from what people are used to. So I want to know what were some of those common ones. I think Harshita mentioned one, what VCs would constantly say. What was the pessimist view on Timeswap?
Yeah, I think the most common thing I would say is like uh, people found it hard to wrap their head around the Oracle listing. I think I don't know if you guys have followed, like over the last few months, the trend of Oracle list has been slowly coming into the market. So there is another protocol called Primitive, which is also trying to build an Oracle list derivative system. So like a year and a half back when we were in the market initially introducing this idea, like nobody believed that it is possible for a money market to exist without Oracle. Like they were like, okay, how is that even possible? So I think that was one of the hardest. I think the most common, like people love the idea, like they're like, wow, like Oracle as money market, but they're like at the same time thinking like that sounds also impossible. So I think that was a very common observation that we got. Then obviously there are other things like the way you guys are explaining it sounds so logically simple. Like why has nobody else built this? Like that's been the most another common thing that comes like, okay, it sounds so simple, why is nobody building this? So we'd obviously say that okay, it's not, it sounds simple on the top, but below this there are thousand other things that goes on, which to build something that works for all tokens, like you need a generalized algo that works for everything. So
Yeah, I think if you look at Rickson's story also, right? Like how Rickson was introduced to us also. He was participating in an Gitcoin hackathon. So like we were introduced to Rickson through Sandeep, like where he was one of the panelists. So what he mentioned is like while he was, basically presenting his idea, like everybody jumped out. They were like, how is it possible? So people started leaving the panel, right? So the story is like for them, whenever somebody listens that somebody is trying to build Oracle-less lending and borrowing protocol, they're not able to, get that. Like, how is it possible? So I remember like Sandeep thought that this guy is working onto something very, very novel. So that's how we got in touch. But the more we delved deep into what he's trying to build through simulations, etc., that it was very mind-boggling to us. Like it's like it looks simple at the, let's say, at the surface level, xy is equals to k, but then why do you think that nobody ever thought of it? And like how are you ensuring that your protocol will work without oracles? Like how is it going to be stable? So that was like initially it was a very, like I would say a struggle to basically convince the investors, but then over the time when our POC was ready, we had simulations ready, it helped us after that.
yeah, and I think that the initial storyline of like what I think we had a Twitter space like last week before our launch with Sandeep, in which he actually explained the whole process, like exactly what went through. So I still remember like what he said was, and so it's like individual rooms. You go into a room where you're just continuously presenting for 5 minutes. You have 5 minutes to pitch your idea. And Rickson was supposed to pitch the Oracle-less lending borrowing in 5 minutes to an audience who had zero clue or background. So Sandeep said, I went into the room, I saw this guy presenting, nobody had a clue. Like everyone was like, okay, this is not possible. And they kept leaving the room. And Sandeep was like, even I didn't understand anything, but there was something like he got a intuition like, okay, there's something here, but he's not sure what exactly that is. So he said, okay, let's catch up. And like basically they connected after the hackathon and then we got introduced. And yeah, that's the whole story.
Yeah, and Sandeep tried to pull Harshita and Amit to at least check Timeswap out, but they didn't listen. They didn't listen for one fucking week.
So basically
Oh
we
boy.
were actually building another credit default swap kind of a DeFi protocol. So we were into the simulations of that thing, and Sandeep comes back from this hackathon. He's like, I met this guy, you guys should speak to him. He's building something very weird and unique. I don't know exactly what it is, but it sounds interesting. We said, okay, great. But we didn't actually speak to Rickson. We went back to building our own thing. So next Sunday, on a follow up thing, Sandeep calls him like, okay, have you guys spoken to him? We said, no, we haven't. He's like, you're shutting down your idea today. You're not working on your idea. You guys are going to speak to this guy. And we're like, okay, fine. We spoke to Rickson. And like, for me, like within first 10 minutes, I was like, okay, this is like truly something else. So I was like, by the end of that call, I was like, whatever you say, I'm ready to build this with you. So I think we went from speaking with Rickson on like a Monday. Like Sunday, Sandeep told us this. Monday we spoke to him, both of us. Tuesday we said we are in. I think Wednesday or Thursday, basically Sandeep and JD said we are ready to put the angel investment. And Friday, I basically resigned from a company. So all of this happened in a week. And that that Friday was the day in which Chef Nomi rugged Sushi Shop. So I still remember, like I put in my papers, and like an hour later, the entire crypto Twitter is like gone bonkers because Chef Nomi rugged the largest protocol. So it's like a pretty entertaining inception story for us.
I want to ask Harshita and Amit. You guys are based out of where? You guys based out
Dubai,
of right now?
Dubai.
Dubai.
Yep.
Do you see a lot of folks from the subcontinent, from India, coming to Dubai?
Yep, yep.
Is that a trend that you're seeing?
Yes, completely.
Completely. It's like if you get down to Dubai Mania right now, you'll like bump into a DeFi founder or an NFT founder all the time. I can't tell you like the number of founders who've moved to Dubai in the last 6 months. It's insane.
Why are they moving? What are they
I mean,
seeing?
it's all about the regulations. Like, obviously, I think it's not that nobody wants to pay tax. It's about like having some clarity around regulation. Okay, if we are building something, what are how are we going to be regulated? What are the ways? I think there's like, other than just saying that we're going to tax, there has been no other regulatory clarity, right? We're just saying we're going to tax you. The rest we'll figure out later. So obviously, people are like, okay, we don't want to take that risk. We are playing the long game. Like, we want to like the last thing as is, we are building in a very competitive environment. You're not fighting against other projects in India. You're essentially fighting in a global, environment. Like, why would you want to have an additional overhead of regulatory risk associated with you when you can actually move to some venue there is no regulatory risk? You are basically competing in a level playing field with other global teams. So I think it makes total sense for like projects to like not wanting to take on that risk. We completely understand that.
What is the state of DeFi on Ethereum right now? Any thoughts on what's going on right now? What is DeFi 2.0? That's the chatter. Anybody has any observations on what's currently going on, and any predictions? I would like each of you to make a prediction of where DeFi will be a year from now.
I think fundamentally, the way I look at the DeFi market right now is, I think we had that first stage of evolution where you had like some foundational products like Uniswap, Aave Compound, and Curve that was built out. And they became the foundational pillars on which now you have attracted significant amounts of capital. But bulk of this capital is crypto native capital. There's not fresh capital that's coming into the system. So you had this significant crypto native capital that have come to the DeFi ecosystem, but I guess beyond that, DeFi has not been able to attract the larger, capital which is outside the system and looking to get into the ecosystem, right? So that is a significant entry barrier, I feel, because like if you go to like Curve, a normie guy will be like, okay, what is this? I can't make the head or tail of this, right? So I think one important trend is definitely like you are now seeing Web2 kind of UIs, which are extremely simple, that is coming on top of DeFi. So I think a lot of protocols are trying this. I think Ribbon is a great example of a product where just you deposit your USDC and just it just does the entire thing for you, right? So it's like earning yield on USDC and you don't have to worry about anything. Another thing which I'm seeing is like the intermingling of DeFi, NFTs, gaming, DAOs, and all of this just intermingling to like, instead of like each of these in silos, like DeFi had its time, then you had the NFT summer, and there is a bit of DAO thing going on right now, and a lot of gaming stuff also happened. All of this was like in silos, but you can now see all of these converging together into like, they're all, like you have like Bored Apes was an NFT, then they launched their token like governance and DAOs. Then you had Axie and all of that, Axie tokens and all the gaming ecosystem. Right now, it's all like siloed and fragmented, but I see the trend of all of this coming together and creating one simple product where everything, all the complexity is just abstracted away. On the front, you're just playing a game or doing some interesting stuff. You don't realize it's DeFi at the back of it. So that's definitely one interesting thing that I've been seeing. I think these two are like two major trends that I feel in the ecosystem going forward.
Yeah, I could imagine an MMORPG game where there's a bank and it's actually time swap behind it. People don't know. They
Yep,
don't care.
that's one of our core growth strategies, that since it's completely permissionless, any project can basically integrate our product into their app or game itself. So natively, like you integrate Uniswap, you can just create now a lending borrowing market within your game itself just by integrating our contract. So that is something that we are quite excited about.
Do you think the second wave of, or this wave of DeFi will be cross chain as well, originating from Ethereum? Do you guys have plans of taking TimeSwap to another chain, say Solana or Avalanche or any of the other ones that may need this?
Yep, sure. I think it's very clear the market has signaled that that the future is like a multi-chain ecosystem. Obviously, it could be which version of multi-chain, nobody can be sure of, but it's pretty clear that it's going to be a multi-chain future. So yeah, for sure, we also have plans to launch in other chains as well. It all depends on like what is the market demand. So like if there are projects in other chains, or let's say that they want to integrate time, so we'll be more than happy to deploy in whichever chain that we, that could be Solana, Avalanche, or even the other roll-ups, could be near, or any of the other basically chain. Since the thing is that since the contract is like EVM, and basically now Solana has a native EVM compatibility, I think through Neon or something, I think, right? So I think it's quite easy to port over. So I think definitely in our roadmap to like launch across all the chains wherever there is demand, we'll be there to meet it.
I'm certain that you guys speak to a lot of Indian founders, guys. Want to know what are some of the common mistakes that Indian founders are doing, and any advice, something simple that can probably help them. And don't say not moving to Dubai.
I think that's completely up to them. I mean, but I would strongly advise to not have that headache of thinking of that thing. But yeah, I think common mistake. I think what we have seen people make is like a lot of people are like moving into Web3 after the recent like hype in the last 6 to 8 months, right? So they are coming into Web3 crypto with a lot of mental models that they've learned from the Web2 world, right? But fundamentally, nothing that worked in Web2 actually works in Web3. It's a completely different paradigm. It's a completely different ball game. I mean, ad-based models don't work. You have completely different content-based models, and you have. I mean, if you look at any kind of growth trajectory, the way you acquire users is so different in Web3. So I think one of the fundamental mistakes that people make is they try to force fit their learnings from Web2 into Web3, and many times that doesn't work, because you have to first understand how this ecosystem works. What are the key, how is the market structure? Who are the key players? How does this industry work? I think that is something that you only get to learn by being present in this ecosystem, by being present on Twitter 24/7 and seeing what other things that other people are doing, right? Like unless you are on Twitter 24/7, you don't get this industry. Like this whole industry runs on Twitter, honestly. What people I've seen is like they have some idea that works well in Web2. Now they're trying to force fit that into Web3. That is not going to work. You have to fundamentally understand this market. How is this working? And then you basically, okay, there is a problem here. I'm going to solve that, and then build that. So I think that is what I would say. Like learn how this industry works. Get on Twitter, see how this industry works, and understand the market structure. Whether it's NFT, DeFi, DAOs, or GameFi. Like understand each of these are micro markets, and all of them behave very differently. And you have to be like really well entrenched in that system to actually understand how the system works.
I'm not Indian, but I do have an advice. Study game theory and Austrian economics.
That's the Bitcoin.
Game theory, Austrian economics. That will give you the foundation to understand which is a good protocol to try to work on. Because if you don't understand those two shit, you're walking in the dark.
It's funny. It's funny that Rickson is recommending reading Austrian economics as someone who's building a Keynesian protocol that allows you to
Yeah.
borrow against a long tail of the worst shitcoins.
I was just saying that the inner Bitcoiner of Rickson was coming out. So at the core, like Rickson is a hardcore Bitcoiner. So that just came out.
Harshita, you had something to say here?
Yeah, I'll just add on to what Amit mentioned, because I have seen recently like a lot of my, let's say friends in India, even, people who I'm connected to are into crypto. Like they are like, if they have a small idea also, they want to become founders, right? They don't want to first become the contributors in the industry, understand the space. They don't do a deep analysis of what, if the product has a market fit. So I've seen a lot of protocols, a lot of projects which started, they had a good team, but the idea was not, like, they haven't spent much of time. Most of them are in a hurry to launch the tokens, etc. So I would say, it doesn't give a good name to overall, Indian ecosystem also. So be in the industry first, get into those communities, understand, let's say, if your idea basically scalable or not. And once you're convinced, you have done those, first round of testing, etc., then only you should proceed.
On that note, thank you so much, guys, for joining us.
Yeah, I think before just wrapping up, I would like to thank you guys also. I think like literally half of TimeSwap we hired through Super Team. Like your job board basically helped us hire, I think, our entire marketing team and also like a couple of devs. So thank you for that, and always great to have value add investors for us with us always.
Proud VC. Proud VC.
Yes.
Thank you.
Bye, guys.
Thank
Bye.
you so much. Thank you
Bye,
guys.
Axel.
Thank you, folks. Take care.
Bye. Take care. Bye bye. Thank you.
Bye, guys. Bye, bye, bye.